Good, you can hear me. So we are back after the break. I do hope you feel energized and ready for the third part of the third section of today, which will be focusing on scaling up renewable energy. We have actually discussed and touched on renewable energy as one of the main solutions and strategies to get to net zero in terms of energy transition. So I think now we'll be digging much deeper and zooming in on some of the particular steps how we can scale up the solutions and renewable energy. So without any further ado, I see people are still coming in, so please continue to come in. And I will just give the floor to the moderator of the next section, that is Claudia Patricolo, editor of CE Energy News, and I will let you introduce the speakers and the panel. So please, Claudia.
Thank you. So if you don't feel energized yet, don't worry, because this panel will give you a lot of energy. I'd like to ask all the other speakers to come on stage, please, just do not let me alone here. But we will introduce yourself later during the discussion, so I don't make any mistake pronouncing your names. So welcome back, everybody. We start now this panel about scaling up renewables. There was already some talks about that and a question from the audience right before in the last panel about renewables, so it's important that we also tackle this issue. I had prepared actually some introductory remarks which were taken from me by Pavel before, because I used the Embers report, so just to give you some numbers about the renewable energy landscape in Central and Eastern Europe. I was reading the report made by Ember, and saying that Central and Eastern Europe actually covers like 20% of the population of the European Union and 15% of the European Union's GDP. But then when it comes to solar and wind energy, we're talking about 12% and 7% respectively of capacity installed. But the potential is enormous. We have seen before that we're talking about like 200 gigawatts of wind and solar capacity installed by 2030. And if we add also the offshore wind energy, is going to be much more. And Giles mentioned also this morning that there are some important milestones coming up, like the review of the national energy and climate plans, which is something very important. Before it was mentioned the case of Estonia, and I actually would like to focus on one number when it comes to Estonia, not just the 100% renewables target, but money-wise. We're talking about almost 1 billion euros in grants. So this is a lot of money that could be put to a good use, actually. But it's not just that, because if these countries in the region would align with the EU energy and climate policy, they would unlock an enormous amount of money. We're talking about more than 130 billion euros in EU funding through the Recovery and Resilience Facility, through the Just Transition Fund, the Modernization Fund, and we will mention all of these together. And in particular, I would like to focus on the Modernization Fund, especially because of the case of the Czech Republic, that has made good use of that over the past 2 years, with more than 100 projects approved and that went into operation later. And now with the reform of the EU ETS, this fund will increase and will reach 22 billion euros by 2030 only in this country. So to talk about the changes in this region and how this region could live up to its full potential, including also the obstacles that we have to overcome, we have a very good lineup here. So I would like to give the floor to each of you so that you can briefly introduce yourself. Before that, I would like to remind the audience that you can use the slide QR code, if we can see it here on the screen, both the audience present in the room and also those watching us online. It's a unique opportunity to ask questions to these amazing people here, so take this opportunity also yourselves. Please.
Just a quick announcement. I apologize for interrupting. So just for anyone who actually came here for a business leaders forum that is next door, just so we know, so we can actually move to the room next door, because we are currently running 2 parallel sessions. We have this discussion, and there's also around, sorry.
You don't know what you're missing.
Hopefully not everybody's going to leave.
Exactly. It's a smaller room, so should be good. But anyway, anyone, so business leaders forum next door, and but even for them, I will find them, and I'll share the link to this discussion, so they will still watch it after Apologies, back to you, Claudia.
We will be like the football match, right? People looking something and then on the side, okay, something else is happening.
I didn't want to say that out loud, but that's exactly what I'm hoping as well. Good, back to you.
Okay, thank you. So, Jan, we can start with you. Jan, sorry.
Yes, good afternoon. I'm Jan Cornili. I'm the regional manager for Europe, Middle East, Asia of Renewable Energy Technical Advisory 3E. We're based in Brussels. We have offices in France, Spain, India, and South Africa. And we are active in all the stages of development of solar, wind, batteries, renewable hydrogen, not as a developer, not as a lender, but as a technical advisor.
Thank you, Gabor.
Thank you. So my name is Gabor Molnár, and I am the Director of Development and Engineering with Med Group. And in this capacity, I am overseeing all the solar development and construction activities what we have in Europe. Which consists of actually two big baskets, one being Central Eastern Europe, and the other is Southern and Western Europe. The origins of the renewable portfolio in Med Group is related to Hungary, so our core activities are still, when it comes to operating assets, is still attached to this region. So I hope that I will be able to provide useful insights for this part as well. But our growth targets going forward are definitely more related to the western part of Europe. So that's why I hope that I will be able to provide an overarching picture when it comes to bottlenecks and also potential incentives.
Thank you, George.
Thank you. My name is George Vermandel. I'm responsible for business development for Resolve Energy. We are a fairly new company. We're only have been on the market, known, I think, trading for about a year now. However, the roots of our company go back a lot further. The management team was previously with another fund that was active in the region for 15 years already, doing renewable energy projects across Poland, Czech Republic, Croatia, Romania, and looking at projects elsewhere. We teamed up with Actis, which is a large global fund that invests into renewable energy. We teamed up, and in the first year of our operation, we have closed acquisitions of about 2.5 gigawatts of projects, of renewable projects, in Romania and Bulgaria. And we're actively looking for more projects in the region. One of our focus areas is the Czech Republic, but I think we'll touch on some of the problems we have here. It's a very difficult market, so we haven't done anything here yet, but we're in the market and we're looking for more acquisitions as well. So.
Thank you, Bart.
Hello, I'm Bart Tuczynski, Director of Proventus Renewables, and my background over the last 23 or 24 years has been as a banker, an investor, and an operator of renewable energy projects, including the creation of Poland's largest renewable IPP. And I now work with investors and developers across a wide range of investing into development projects and operating assets as well as clean technologies. And I focus on anywhere from the Balkans to from the Baltics to the Balkans, with Poland being a specialist subject.
Thank you. And last but not least.
Thank you, Patricia. So good afternoon, ladies and gentlemen. My name is Martin Dratva. I'm representing fund Nova Green Energy, which the name says we are focused on renewable energy sources. We have more than 60 megawatts of PV installations and some biomass power plants located in 3 countries, Hungary, Czech Republic, and Slovakia. So similarly as George, I'm representing more the investor side, and we'll try to provide you our focus as investors, because we are compiling together let's say, some Western money from DACH countries and then investing them into our region. And our focus is the V4, and then as well the Baltics and the Balkans in the future.
Thank you. So Bart, let's start with you. We mentioned a lot during the day about the challenges that this region has. So what do you think has to change in order for CEE to improve, to scale up renewables? And if you also can provide the example of Poland. George was saying that the Czech market is particularly complicated, and we will hear from you later. But first of all, what is your overview of the region and Poland in particular?
So I think I think that the issues touching every Poland will be very similar in many ways to other locations also in Western Europe, which is the availability or the ability of the grid infrastructure to absorb the renewables coming online. A big driver, for instance, Poland is in the process of approving its update to the energy strategy, which will be targeting 50% of renewables by 2030 in capacity terms. It'll probably be less in terms of volume, but in installed capacity, the target is 50% by 2030, which means a huge jump into roughly about 30 gigawatts of PV, about 11 gigawatts of onshore wind, and another 11 gigawatts or so of offshore wind.
And is it something achievable for a country that has like 76% of energy coming from coal?
Yes, it's definitely achievable. You know, Poland has, right now we have, I think, 13 gigawatts of PV from zero a few years ago. So yes, it's achievable. Now, the nice thing about Poland is the grid issue has been actually addressed from bottom up. So we had an investment plan approved by PSE, which is the TSO, where PSE went to the regulator and said, I need to have this investment plan approved to modernize the grid because I need to have 50% renewables in 2030. So bottom up, the regulator then approved it, and then whatever's been approved by the regulator in terms of the TSO has now been taken up by the Ministry of Climate, and on the back of that, the strategy is being updated. So it's actually quite a healthy way of doing things, rather than the politicians saying we need to have X gigawatts of onshore PV and offshore, and that's it. Rather, it's taken information from the grid and then building a strategy around that. So that's very positive. So there's a whole bunch of modernizations, new lines, but actually what's interesting about Poland is the TSO and all of the DSOs and the regulator got together and created what's called the Charter for Energy Transition of the Infrastructure, which means all of these counterparties, which are the main stakeholders, i.e. the people that manage the grid, have now got together, created this charter and said, like, this is what we need to do in order to make sure the grid is ready. And this includes modernizations and reinforcements, but it also includes non-investment measures, so things like how do we technically allocate capacity, how do we measure N-1 scenarios, there's a real, let's say, the dangerous probabilities when the grid infrastructure can blow out. But actually also pushing the government for regulatory measures such as direct line connections, cable pooling of technologies, commercial connections. So all of those sort of things are beginning to happen. And I think this is why, you know, working with lots of investors and developers, I'm always saying, you know, there's quite a lot of options now to connect. And we have to look at things very strategically and not just kind of put in applications and hope for the best and create this massive congestion line, but actually think about it creatively. So I'm actually very positive that, yes, we can get to 50% renewables. Maybe, frankly speaking, based on history, I think it'll be more. I think that battery storage is now coming online in Poland as well. We have capacity auctions which have approved capacity contracts for batteries. There's a balancing market reform happening, which is going to kind of cut and paste the UK regulations into Poland in terms of allowing for various frequency balancing services, frequency regulations to be provided by batteries. So I'm very, very bullish, and I think it can happen, and most likely, hopefully, it'll be more than that, because everybody is looking at things geopolitically as well. So the brutal invasion of Ukraine by Russia may have one positive, if we can even call it a positive, because it's a brutal and devastating invasion, is the fact that energy transition will speed up. And I'm certainly noticing in Poland a lot more focus on independence and really, let's say, reinforcing the grid and getting it ready for renewables.
Well, it's like what happened with COVID, for example. At some point, we realized we were emitting a lot of CO2 when everything stopped. So we need some tragic events maybe to understand things. And so if you say that the TSOs were proactive and the regulators responded very well, so what kind of actors should actually do more in
well,
to
those
make
are
a
the
change?
actors, right? Those are the main actors, is the operators of the grid. They should be preparing to manage the grid and make sure that the grid is ready for the renewables. So for me, those are the actors. Everybody else will fall into place. The developers will create the projects. The legislation will form around this. So I believe, that actor, if you can call it, the DSOs and the TSOs are, for me, number one. Of course, and regulations in and around that, things like cable pooling, allowing for pooling of different technologies. That's maybe the other actor, which is the government and let's say the ministry driving the change. So, I would say that's number one. Number one priority.
This bottom-up model worked very
well.
well.
Yeah, I think it's really interesting. It's really happened. Let's see if it works, but it's happened in a way. It's like building a budget. You got to go and get your assumptions first, and then build it.
Moving then to the Czech market, George, I wanted to ask you. You mentioned you had some difficulties. So, what kind of difficulties did you encounter here?
Well, we're not developers, so
I mean, compared to other markets that you have observed, what are the challenges of the Czech market?
Well, we look at projects all over the region. So I think I'll start off by saying we just don't see many projects here. We see a lot of significant projects in Romania, Bulgaria, all kinds of places where there's good resource. In the Czech Republic, there's more challenging resource anyway. There's not as much irradiation as you have further south. There are some windy areas, but they're protected and nobody wants them there. Not a lot of NIMBYism here. And so we don't see a lot of the projects. And the economics don't work so well. I'll also say that on a number of the developers who now have projects, we're seeing a lot of greed involved. People have the first projects and they're saying, okay, well, we want a very high amount of money, and they hear what we're paying for projects theoretically in Bulgaria, Romania, and so on. And even though the resource isn't there, and the tax is higher, and the projects are smaller, and you don't have the economies of scale, and so on, they're still asking a very high price. So there's also a bit of a gap between expectations of what people think their projects are worth and what an investor thinks they're worth. There's cultural problems here. I think leadership, I know for 10 years the president here would go on TV twice a year and go on about the evils of renewable energy and the solar barons and everything like that. So that doesn't help as well, especially when you have a lot of permitting issues. And I think that was touched on in one of the panels this morning, is just getting permitting done in this country is very difficult. And if you're a municipal politician and all your voters keep hearing that the solar barons are evil people and renewable energy is bad, and you keep hearing it from the president, then obviously the municipal politicians are not going to be very favorable for it being built in their municipality either. And then that slows down the permitting. So there's a lot of issues in this country. We are starting to see some projects, and we are talking to a few people here, but I think we're generally not particularly hopeful about there being a big renewable boom here as opposed to further in the south.
Gabor, let's move to you. And you said that MET is also expanding its renewable portfolio, is entering other countries, other markets. What do you think are the most promising business areas? And what kind of, if we talk about finance, then what kind of financial incentives are needed to scale up renewables?
Yeah, I mean, business models, financing, and the policymakers' incentives are pretty much going hand in hand, right? So what we first need to admit is that what is the ultimate goal of the policymaker? They now want to provide or make generators provide reliable, stable, cheap, and green electricity. And this is not that easy to resolve. I mean, it's really the classic energy trilemma, which we have to face now. And practically we see it in a way that the policymakers now have to come up with solutions that are also encouraging investments, not just on the generation side, but also on the grid infrastructure side, and perhaps on the flexibility or balancing side as well. Because we also perceive quite a lot of action on the generation capacity, and in general, at least in my opinion, the green power generation industry is perceived as something as a cash cow now, because the power prices are high, technology is cheap, financing is abundant and quite accessible. Whereas in reality, we see quite a lot of greedy developers, indeed, and quite a lot of challenge finding long-term business models, long-term sustainable business models, and long-term financing. Nevertheless, still, the generation part is something that is pretty much addressed and understood by policymakers and also financiers as such. But at the same time, as also addressed by the colleagues previously, we need just as or even more investment on the grid development side and on the flexibility asset side as well. So I think here the key challenge, especially for the policymakers, is to find the right balance between intervention and also market-based solutions. Because if they intervene too much, then we can easily end up in similar situations what we have like a decade or 1.5 decades ago across Europe with the feed-in tariff fueled boom and bust cycle, let it be wind or let it be solar, let it be Spain or let it be Bulgaria. And I think this makes the policymakers pretty concerned about initiating similar schemes. But if they do not do anything, then the only actor who can step in is the state, who is in most of the cases quite sluggish to first understand what is the need and then implement those changes. So just 2 examples here. So the way I see it, at least this battery storage market in Europe, is that the only functioning battery storage market is existing in the UK, because they designed quite well this capacity mechanism that is actually the basis of the business model for them to implement those projects. There is a need for battery storages all across Europe, and there is quite a lot of discussions and quite hefty prices for storage projects as well. Nevertheless, in very few cases, you can see a viable business model. So this is, again, a classic example that policymakers think that they should come, but they do not provide a good enough basis for growth. So I think probably the way out is something, at least in my opinion, the US now tend to find their particular solution, which is pretty well known, this Inflation Reduction Act, and actually Germany is now testing a very similar scheme to be introduced. And for me, the biggest question is whether this IRA is going to be the blueprint that is going to be copied by Europe as a whole and perhaps implemented in CE as well, or we will see different policy schemes and like unintegrated approaches in Europe and in CE in particular. Because just the last thought here, the way we see investment opportunities in the CE is that, I mean, the challenge is also the upside. The challenge is that we are talking about quite scattered markets, different policy schemes, different prices, different history, different developers, different actors, yet we are talking about fairly small markets. If we compare the Hungarian market to the Spanish one, then it's obviously a different league in terms of investment volumes. So at least as an investor, it would be nice to see at least some initiatives on policymaker levels to integrate somehow the approaches towards financing these new infrastructure needs. Let it be market integration, let it be grid, let it be interconnectors, or capacity markets for battery storages. So I see quite a lot of opportunities. It would need quite a lot of learning and coordination. But frankly, I'm also very bullish, because one thing is pretty much decided by now, that the future is going to be green. The question is by when and what kind of obstacles we need to tackle, and whether we fail on long term or we see them well in advance and tackle them properly.
When you say by when, I mean, the right answer, I think, is yesterday. So we are a little bit late for that. But you mentioned something about long term, for example, and the fact there is a lack of vision for long term. So especially now, we focus on everything that is happening now. We have to focus on the short term. So what would be, in your opinion, a winning long-term business model?
I think the trick is that there is no trick. So it should be a legal and industrial framework that is pretty much untouched. So I think that's the beauty of Western Europe in most of the cases, and in Eastern Europe or in the CE region, that's what we see is that there is a lot of experiment with a lot of goodwill behind it. Nevertheless, there are quite a lot of changes in terms of factors that are heavily influencing the long-term business model of these renewable assets. So if I look at it from a financial perspective, then these assets are still should be or can be considered as kind of asset-backed bonds, right? So they should produce the same in the 15th year, similarly to the first year. So as an investor, what we would appreciate is a predictable and stable legal background and framework and untouched incentives. So I think that's what makes the most attractive markets that way. Because, I mean, again, an example, I don't think that Germany is particularly good in terms of solar resources, right? I mean, let's be frank, it's not the shiniest part of Europe. Nevertheless, one of the biggest PV markets. Why? Because they have the institutional background that is trusted by everybody. They have the chief financing, which is pretty much interrelated to this institutional stability. And they have the whole ecosystem, which was built up in the last 20, 25 years. And this is working very well. So we, or the policymakers, need to control the volumes so that they are not overheating the markets one year and busting the other. And they should provide this institutional stability also in the long run. So I think that's pretty much the key.
And speaking then of different parts of Europe, I will turn to Ian. I mean, for example, I live in Sicily, which is a typical sunny place, and actually there are more wind turbines than solar panels installed. Considering that it is windy, but not as it is sunny. So yeah, sometimes there are some discrepancies that we don't see. So my question for you, Ian, if we think about the fact that long time ago renewables were just a dream and now it's a reality and we have seen the costs also going down, what is the reality? I mean, if we have to make a reality check, let's say, of the renewables.
Yeah, it's a very good example, Sicily, and I actually wanted to dwell on that example because recently we have done a study for a global warehousing company that wanted to look at 24 countries in the world, of which 10 were European. And so we assessed the resource, we assessed the support systems, the ancillary services, the balancing market, the frequency regulation, and so forth. And as a general conclusion from that, what you see is that actually it's the least resourceful countries in the world that have the best regulatory systems and also have been able to stabilize the business model. And I think that's a very powerful conclusion from that study, and it hinges on what my colleague here said. It's respect for the business model of investing in a clean energy asset and being able to get your money back over time. That's really important, and that's become a bit of an issue, and it's still an issue in some countries. And then what you see, for instance, is that, I give two examples. You compare the Netherlands and Italy. Now, which country is more naturally endowed with sun? The Netherlands or Italy? It's clear, it's Italy. Yet, in the Netherlands, they have double the capacity of solar power per inhabitant than in Italy. And the reason is, and it's the first market in Europe now, it has surpassed the Germans. It's the biggest solar power, in a way, in Europe is the Netherlands. Now, you wouldn't have expected that, but it is because there's a stable support system, there's stable regulation, there's no clawbacks once you have done the investment and so forth. And so, basically, you can count on it. And obviously, the Dutch always exaggerate in business. That's a bit a natural tendency of them. But they also profit from location in the sense, the interconnections with Germany, with Denmark, with Belgium. And so these interconnections have made their market much bigger than their own Dutch market. It's a common market. And so this electricity is freely flowing. So that's one example. The other example I would want to give is, for instance, you compare Poland and Portugal, same question. You know, which country is more endowed for solar, Portugal or Poland? Yet the capacity invested in Poland is many times what is invested in Portugal. And again, it's about the business model and the business environment in order to have this investment and make money on it. And that's where I think there is a reality check to do also for the industry. And that's the second point I would want to make. That is, you know, the targets are there and they're ambitious. The subsidy schemes are there, whether it's in the US, IRA, whether it's in the EU, whether it's in China. There's a massive support for the clean energy industry. And, but as an experiment, last year in January 22, I bought a BlackRock clean energy tracker fund. So basically, it's American, European, Chinese companies, and there's no decision, there's no real selection, it's a tracker fund, you know, it just tracks them. From January 22 till now, minus 10%. So you would think the industry is, you know, is in top, you know, in a vibe that is can only go up and everyone's making money. Well, clearly not everyone is making money. Some actually are and I know the stock market is not the whole reality. If you ask a reality check, stock market is only one of the reality checks. But what we see is that the business model, and I'm always coming back to the business model does have some challenges. Obviously, increasing interest rates, cost of capital going up, and we saw the slide of Giles saying that it's also unequal. The cost of capital is not the same in different parts of the world. Secondly, the supply chains and the cost of equipment going up. I mean, until now, you could basically bet on your equipment being cheaper next year than this year. It's no longer the case, especially now, not in these last years, and that's a challenge. That's why these stabilization mechanisms are like contracts for difference are important. And then thirdly, and there I echo what the colleagues here have said, it's the regulatory uncertainty, and both in the positive and in the negative way. I mean, a lot of the regulatory changes that are going on right now in Europe are positively inspired. It's to make things better. Yeah. But you have to wait to know what you're going to get in the end, and the waiting is creating a backlog of projects that do not get to a final investment decision, because you do want to know how much support you will get. You do want to know how the negative prices will impact on your business model, and how the TSO is going to deal with these imbalances. You want to know all that before you make an investment. And if the rules are in constant evolution, this is obviously not good. So I think it echoes what also Giles...
Sorry, but don't you think that the rules are in constant evolutions, because the landscape, the world we live in, is in constant evolution? How can we have certain regulations if we have like global pandemic, and then the year after we have a war, and then we have supply disruption, something that we cannot predict?
Indeed, I mean, there's a lot of macro elements changing, yet still, I mean, there's also the way governments react to that, and whether they respect some of the engagements. We've been talking about the clawbacks, so the excess subsidies that have been given under these systems, and then the high prices, and now governments want them back, which is understandable, but it does do harm to the business model. I also give other examples which are, and sometimes it comes to really small things. In Spain, for instance, they put in place an energy community regulation, which was very easy. Basically, you can say, if you have put solar panels on a common roof, like police station or a school or anything, everyone within 2 kilometers can join the community and benefit from that solar electricity as if it's your own. It's a very simple rule, but it works. And all over Spain, these kind of communities are being created. The question then obviously is, how long will this go on, and can others also install such regulations that are being kept stable afterwards? Once you have decided them, you know, keep with them for a while until it has success and it can bear fruit. And I think that's important. It's a lot of small regulations, of course, but it's important that it's done, if you make a change, it's done fast, and then it's stable afterwards, so that people that invest in it, they can actually count on getting their money back and having their business model confirmed.
Yes, please.
If I could just interject on your question about your statement, excuse me, on the world's changing, so you need to change the regulations. I think that's clear. I think there's regulation. There's regulation which is adapting to the new situation, and we have to now follow these rules. And there's regulation that said, we as regulators or governments, we made a big mistake 5 years ago, and therefore we're now retroactively going to go and punish everyone who benefited from that system. And investors are smart enough to see the difference between the two. So that's the key thing.
Let's move now to Martin. You've been quiet so far. So now, so we talked a little bit about regulation. So let's go back again to financing mechanism. And what do you think are the best options that we have to scale up renewables?
I have the advantage that I have been patiently listening, and I can, with some of them, I can agree or less agree. But there is one important element that we invest in the project. For example, a PV project, there is a future of 30 or 40 years. So take into consideration that you need to project into the cash flow of 30 or 40 years. And so far, the first PV projects have been alive for example, 20 years. But still, we think that the panels itself can produce the energy for 30 years. And one of the answers of what the solution can be on the scale up of the PV or generate the renewable energy sources here is to do nothing. I mean, and what does it mean? Because some important thoughts were that the policymaker, that means the proper laws needs to be, that's definitely agree. Then the technical details from the distribution grids, that's for sure agreed. But take into consideration that there need to be investors who need to be at the safe side or confident that the cash flow will be generated in the 30 years. And that's why at some point I can claim that if the government does nothing in the couple of years, in the most important 10 years, then that in some cases might be the best for the investors and for the development in the industry. As we have seen a couple in the previous 1 or 2 years, and I think it touches, for example, Poland as well, where the offtake prices of PV panels, of PV projects were kept. And we had one project on the table for Poland, and once the government introduced this, I think it was at 70 euros cap.
For PV, it was higher, around 90.
Okay,
Yeah, 96.
but still, it limits the appetite, for example, for us at that point, and it was quite a huge project, and we simply decided to postpone to enter the country for this PV industry because of its instability. But okay, let's move on the what.
But 96 is enough.
Sorry?
96 euro per megawatt hour is plenty.
Well, depends on the cost of capital, definitely, and how much you need to deliver to the investors. But yeah, but in order to be more positive, what can be supported and how? So, what has, for example, been done in Czech Republic that I will not comment now the 2010, as you mentioned it, the solar barons, because that's not we should build on. But in this previous 1 or 2 years, there has been an incentive on the capital expenditures. So that's one way, and I'm a big fan of not supporting almost anything, but I'm definitely not a supporter of operational support in some sort of feed-in tariffs or auction systems, because that is killing quite rapidly the fiscal part of the government. But I think these capital expenditures incentives are the right way, if any, if needed. And but it has also the disadvantage that, for example, on the Czech market, and I think this has been mentioned, that in 10 years nothing has been done, and suddenly there is too much money given in the circulation. Then the environment is not used to such amount of money, and then I think, as George mentioned, the developers, the sellers of the projects are too greedy, and it financially doesn't make sense. So, and it again brings me to, I think, if we have the right basic terms, as mentioned, the grid and the stable legislation, then for us as the investors, we can live with the free market principle. And I think that should be supported, and the stakeholders shall be trying to keep this as long as possible. So that's how we see it. And maybe the more financing, I'm rather optimistic because the important stakeholders like the banks are nowadays supporting the investments which we or many other investors do, because some forms of the PPA are rather complicated after the war in Ukraine, and you can quite difficult get 10 or 15 years PPA with a counterparty which the bank accepts. So there are only some countries, I think Germany was mentioned, with the developed market where the PPAs are quite widely accepted and created. And here in our countries, for example, Czech Republic, but I have heard in Latvia, basically there are no PPAs. So you come to the bank and the bank tells you, bring me the PPA. There is none, because I think in Czech market so far 3 or 5 of significant volume has been struck. So, and that's why I'm positive that the banks are supporting the, let's call it, merchant regime, where I sell the electricity on the spot market. And then it's already my risk how I evaluate the forecast of the, I don't know, 10, 15 years of the spot market. And the banks are still willing to finance it. So that's why I'm rather optimistic. I think that's the right way. If I have the stable environment and, of course, the bank which wants to play with the same rules as myself, then I think that's the good combination how we can develop the renewable energy sources in this region.
I will give you the floor now, but before I remind you that you can still ask questions on Slido, because I see we have a very shy audience for this panel. So I encourage you to ask questions. In the meantime, Bart, you wanted to disagree with
no, not disagree,
or agree?
maybe evolve a little bit. So I would say, my colleague here mentioned let's say this halting of a decision based on the price cap, which was introduced by Poland. But which, by the way, it wasn't Poland that introduced the price cap. It was the European Commission, which enabled all of the member states to introduce caps if they wanted to, at any level below 180 euros per megawatt hour. So it's the problem with that was, first of all, it was as a result of the war or the invasion of Ukraine by Russia, and secondly, it was for a limited amount of time, and thirdly, it wasn't in this particular case. The problem wasn't with the cap; it was the fact that the investor didn't earn enough money as a result of the cap. That's not the problem of the market, it's the problem of the investor, because in that particular situation, 90 euros plus per megawatt hour should be plenty to make a decent return. But that's obviously a specific situation. But I'm personally a big believer.
It depends what you acquired the project at.
If you paid a lot of money for the project, then it's also, so it's an individual situation. I think that what I wanted to say, I fully agree. So I actually think the markets today in the region are very efficient. There's not so much subsidies going on, and there shouldn't be. We have a very liquid PPA market in Poland. It's the 4th most liquid PPA market in Europe, ahead of the Scandies, ahead of most of Western Europe, with the exception of UK, Spain, and Germany, in terms of numbers of transactions. I'm involved in a number of projects, one particular contracting exercise where we've just gone out to over 100 off-takers. And we're getting quotes in euro and PLN, and we're getting quotes from 5 years to 15 years, and we're getting quotes for pay-as-produced and baseload, so all sorts of different structures. And actually, what we're going to end up doing is we're probably going to contract some of the projects. We're going to contract various different tenors, and some will leave actually uncontracted. We'll go on a merchant financing because we really want to build them quickly, and then we will contract them once they are built. And banks are willing to lend on a merchant basis. Of course, they will lend a little bit less if it's merchant than if it's contracted. But it works really well. And where I do think the European market design rules, which came out of the European Commission, are very good, is they are pushing all of the member states to do two things. One is allow PPAs to happen, so foster offtake markets, and two, allow CFD auctions to happen, competitive CFD auctions. Because competitive CFD auctions is not a subsidy, because competitive CFD auctions are normally, in fact, always now, significantly below market prices. So they are not a subsidy. None of the consumers have to pay anything, neither does the government. In fact, if anything, the government gets money back from such a scheme. And what that allows to happen is more projects to be built. You can actually mix up a PPA with a CFD or a CFD with a merchant. And it obviously stimulates the supply chain, et cetera, et cetera. So it actually works really, really well.
That's what Giles was saying also this morning. They're good for society, they're good for the government.
Thanks to Wind Europe, amongst other counterparties, is why we have this mechanism.
I just wanted now to move a little bit to George. I will come back to you, Jan, because we haven't mentioned the private sector. And it's also important when we talk about financing and scaling up renewables. What is the role of the private sector? And especially, how can we de-risk these investments for the private sector to make them more interesting and appealing?
Okay. Bart just stole some of my thunder to start answering that question, but I mean, I would sort of focus on three elements. One is putting in place the elements to reduce the variance of your revenues and your cash flow. And don't have to go further into detail. He just covered it with the CFDs and the PPAs and so on. The second element is to have the regulatory framework that actually supports these tools in place, because they don't always work the way they're supposed to. And the third element, which I'd like to touch on, is how public money is spent and how that affects how the private sector invests and follows up on those things. So I think we've already talked about the PPAs and CFDs. We've got some. It's one thing to put it in place, but if everything else and all the supporting regulation and laws are not consistent across the EU, then sometimes they just don't work together the way they're supposed to. And we have a few examples I can give you. Is Romania is a very large market for renewable energy, and up until about a year ago, you were not allowed to sign a PPA. Now, the reasons for that were historic, because there was corruption and all kinds of dodgy deals that were happening 10 years ago, so they blocked them, but it took them an awfully long time to allow it again, even though the market was screaming for it. So that certainly held back Romania for a long time. Now they now allow it, so that's an example of regulatory lag that didn't help them. Another thing that we're dealing with specifically in our company right now is we have big projects in Romania, and in general, if I speak a lot about Czech Republic, where we're based, and Romania, where we have most of our investments right now. Czech Republic is a country that has a big industrial base, very limited renewable energy options for anyone to buy from. Romania is completely the opposite. There's lots of renewable energy resource there and relatively little industrial base and demand for power. Right now, the logical thing is Czech companies, or it doesn't have to be Czech, but let's use it. They should be buying their power, or they can buy their green power from Romania, from projects in Romania. Right now, you cannot export renewable energy green certificates or GOOs, which guarantee that you're buying renewable energy. You cannot export that from Romania outside to other countries in the EU, and that's simply a regulatory issue. There's no other reason for it right now, and that's a lag, and that's preventing investment as well, because that's blocking cross-border PPAs, which is a big issue in our business, and I think everyone who's investing in this part of the world right now, and they're not the only ones. Romania doesn't allow it yet. Bulgaria doesn't allow it yet, or they haven't pushed through the changes required to allow it. Albania hasn't done it. North Macedonia hasn't done it, and there's others. So these are kind of these regulatory obstacles that have to be put out of the way to allow free trading of power and efficient markets. Right? And the third topic I wanted to touch on was how public money is spent, and by public money is not only government money here, or national governments, but also EU money. And we've had a few references to the modernization fund. And as an example, Romania has given a lot of that modernization money to the TSO, to the transmission system operator, and they are upgrading the grids, which you touched on as well as a key component to success stories like Poland.
And it's very clear, actually, in Romania. It's very clear as to what capacity is available where. You can go on a map and check exactly.
But they don't reach everywhere. That's the problem with Romania also, that there are a lot of places that are still not very well connected.
But it's transparent. It's transparent.
It's
you can
transparent.
see a lot of
At
countries
least we
it's
know
not transparent.
that. We know that.
That's one issue. But I'm focusing more on, so what are they doing about it? They are now, they're investing money into the transmission grid, and that helps everybody. That helps anybody who's trying to invest in the region, and it helps the whole sector. In Bulgaria, I don't think they're nearly as advanced in implementing, but their concept is more based on batteries and trying to get the cost of balancing down. So they want to put a lot of that public money and EU money into reducing, into, again, helping the whole sector as a whole. If I can contrast that to the Czech Republic, all the money is going to specific projects. And that distorts the market. It puts a lot of money into the hands of only the developers, not so much everybody else. And we don't think it's necessary. We're really not fans of direct subsidies into projects. And I think it's how intelligently the public money gets spent in different markets. That's a big signal to investors as to where they should invest and where they shouldn't. So.
Jan, you wanted to comment on something?
Yes, and again, some of the things have already been addressed. What we see in many countries is that the political discourse and also the policy making as a result of that runs almost 10 years behind on the current realities, because we all had our period of over-subsidization where it was not efficient, it was fixed price, and then people made a lot of money on it and so forth, and then there was a scandal, and then now we almost do not dare to intervene or intervene in very impractical ways, and so we need to move on from that and go to the current opportunities of reality, of the current reality, and there. Indeed, I think in Europe you see somehow a sort of harmonization towards the combination of PPAs with corporate clients and CFDs that the government can put in place. And I give two examples where this is really, the opportunities are there and can be helped by governments. And there I would a bit disagree.
We will allow you one example.
Okay. Well, you talked about Estonia, the 100% target. The 100% target is given by offshore wind, because Estonia, they will develop 1 gigawatt of offshore wind. They could easily do 8. I mean, there's no real limit on their development. The only limit is the grid connection. They need to get, because they don't consume that electricity, they're going to be at 200%, at 300%. So they need to have the grid connection with Finland, with Latvia, and all the way down. And that's where I think Czech Republic is not unlike Belgium. Industrial region, relatively small, very dense in activities, very dense in population, not many opportunities, not many resources, but our biggest resource are all our interconnections. I mean, we're the most interconnected electricity market in Europe, and so we take all the benefits from France, Germany, the Netherlands, everywhere, and we can export. And I think that's, if the Czech Republic projects itself into such a future, a lot of opportunities open up again.
We have a couple of questions from the audience, so I'll start with that. One is, how is cannibalization of solars impacting the investment model? And can the accumulation affect it significantly? Who wants to take that?
Cannibalization, did you say?
Yeah.
Yes.
And
So
the second part of that was?
And can the accumulation affect it significantly?
I'm happy to take on that if you don't mind. I mean, because I will be short. So I think there is this phenomena that everybody is now focusing on solar in Europe for various reasons. Easy permitting, relatively easy permitting, short development process, and all the other things. Therefore, we are moving into one direction. And this naturally leads to cannibalization, which is going to have a huge impact on the future business models. And I think this is related to the second thought of mine, is that everybody is seeing the PPA market as a kind of panacea for everything, but very few people understand that there are very strong limitations in terms of PPA offtake capacities coming from bankable large industrial customers. So my point is that very soon someone, let it be the state or utilities or whoever, has to step in to offtake those capacities, also considering this upcoming huge effect of cannibalization, unless we manage the diversification away from purely solar. But over to you.
Actually, this connects with the other question, so I will ask to you if you want to reflect on this, and also the other question, which is, what is the best way to limit the impact of future solar self-cannibalization for the investors? Would PPA and CFD suffice, especially in 5–10 years from now?
If I may, yeah, those two questions naturally relate to each other. Actually, we have now come across a similar problem, and the beauty of the first question is that the technical and the strategic question at the same time, because we have seen that, for example, speaking about 5 or 10 years PPA, you get the response that the price is not that will be not that high because of the cannibalization of the solar industry. I have heard such response from the large utility company, European one, 2 weeks ago for the first time, once discussing the project. And so what is behind that? It won't be sufficient, for example, for me or the investor just to have plain PV plant, because it's, as we all, I think, can agree that the green energy is the right way, and it's, I think, somebody mentioned by when, so that's given. And if there will be only one sort of unstable energy source, it's clear it's not feasible. So, for example, in one of our projects, we are creating a combination of PV and wind, and with a combination of battery, if it makes economical sense. So I think that's the right way to combine and to make it more sophisticated, and not to be only the investors or operators, doesn't matter, of the one sort of energy. So I think that's the very good question, and it needs to think of the investors or stakeholders to think beyond the region of 2 years, because once the capacities are installed, the problem will be here, and the players are already taking that into consideration. Brilliant question.
We still have some time, so because you mentioned, Bart, before, for example, the European Commission, and Ian, you mentioned the IRA, I just wanted to talk a little bit about, we talk about players in this region and in this sector. What is the role of the European Commission, in your opinion, and what is the role of the European Commission compared to the IRA and as a response to the IRA? Bart, you can start. Very briefly, we don't have much time.
This is a very political question, because the IRA is great for US industry, and lots of storage capacity is going to be built, panel module manufacturing capacity. And it's great from one perspective because it diversifies away from a single production location today, effectively, which is China. Now, it's fine, but it's always healthy to diversify. So that's what's going to happen with the IRA. I feel the Europeans are falling behind a little bit. I think that, and that's perhaps is by nature of the beast. You know, it's just more difficult to put something in place for all of the member states. But I would love for that to happen. So I would love for our region, the Central Eastern European, Southern Eastern European region. I also include Ukraine in this going forward. For that to be very much a manufacturing hub for some of these industries, if we can get some of. But that unfortunately, that does need subsidy to get it off the ground, to put the gigascale production facilities in place to then begin to be competitive.
Yes, very rapidly. I think what the Americans got right is that they stabilized the business model. You know, for the next 15 years, this is what you're going to get. So you can actually finance it from your own terms, your own capital. I mean, so it's this stability which is good. And secondly, they create their own manufacturing industry. What we have done in Europe is we say, oh, we have the innovation fund, so you get money, capital, to try new things. We can't guarantee you whether it's going to bring any money in the end. And secondly, actually, by the way, we just spent 600 billion on subsidizing the fossil alternatives. That's what we've done in Europe. I mean, you know, we intervened in the prices in order to subsidize just the opposite. So I think there we need to reflect in Europe, this is not the right mix. You know, stop subsidizing fossil and fix the business model. That's the way forward for renewable energy, for clean energy, and then it'll go by itself. There's no lack of capital in Europe. You know, there's a lack of stability, and I think that's where the Americans have, on balance, right now a better deal. But you know, we can get there.
Yeah, if we can, because that's what Americans have done. They've basically said, if you want to build a battery factory, I'll give you 30% off or something to that effect. So hugely competitive, bringing forward the price curve 5 years for hydrogen as well. Electrolyzers is going to be, you know, it's going to bringing the cost curve forward by a number of years as a result of that.
Somebody said hydrogen at the end.
It's got to be. You can't leave a company. You've got to say hydrogen.
You cannot not say that. So, but at least it was the end. So we're reaching the end of this panel discussion. I would like to ask a question to all of you. So let's play a game. You know the game, complete the sentence. So the sentence I'm giving you is, if we have, insert a word of your choice, then everything else will fall into place.
Say again. Sorry.
If we have, and a word of your choice, then everything else will fall into place.
Okay.
Enough?
Enough. Okay, I like that. Okay, Bart.
Grid capacity.
George.
You just stole mine.
We can skip you.
Stability.
Stability.
Yeah.
You stole mine. Then it's cheap financing, I would say.
Ian?
Well, I will add flexibility then.
That's a good one.
And I think the circle is complete. So thank you very much for sharing with us your insights. Thank you for listening. So big round of applause for you. Thank you.
Hello. Thank you so much, Claudia, for the brilliant moderation and managing to extract so much information from this wealth of experience and knowledge. So well done to that. And thank you so much, all the speakers, for contributing as well. Now we will have a 30-minute break for some coffee as well, just to still stay energized and still wait and listen for the last panel, which will start in 30 minutes. So enjoy the break and enjoy coffee.